I'm going to show you all how you can save $10,000 to $100,000 on your tax. This is not clickbait. I'm going to show you with real examples that I've used with mentees and students of mine, and that I've used in multiple of my six-figure businesses. Let's begin straight into it. So, the principles will apply no matter what country you're in. However, the context will be Australia specific. Understanding tax rates versus business structure versus employee. So this will apply to everyone, whether you're an employee or whether you own your own business. And at what point should you transfer over from a sole trader to a company? Tax deductibles, we're going to be talking about that, and what the government says you can legally deduct as tax, and how you can be more intelligent, wink, 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 with your tax, so you do not have to pay as much as you think, but still stay in the realms of ethics, morals, and legalities. Let's go. So, first one we have to understand is the difference between a sole trader versus a company. This would be the equivalent of understanding an LLC in America versus the other version of what is not an LLC, if you're just hired as an employee. First, I need to show you the tax rate comparisons, okay? You need to analyze carefully before you decide. So all of you are going to be sole traders if you haven't registered as a company. If you're an employee, you have to register as a company. So it's not something that's just bestowed upon you. So as you can see, on the left-hand side is the resident tax rates for 2019 versus 2023. And you can see, I'd show you this because the brackets have changed. The tax brackets have changed. So we can see the first 18,000 is tax-free. And then from there, it's taxed at different percentages. It says 19 cents for in the bottom for each $1 over 18,000. Now you can just basically call that 19% right there. And you can see a thing to be noteworthy of is that the tax bracket of recent years has widened, meaning now you are taxed from 45,000 to 120,000 at $5,000 plus, so that the absolute number is increased versus 2019, plus 32.5%, 32.5 cents. So we're going to need to be able to answer, well, when is it actually favorable to change over from a sole trader to a company? I've done the calculations for you, so you can figure this out. That is later in the video. And then we can see on the right. So basically, if you're earning between 45 to 120,000, which most of you watching this are, because the median income in Australia is about 80,000, you're going to be paying first 19%, from 18,000 to 45,000. You're going to be paying 5,000 plus 32.5% on your taxable income. And your taxable income is after deductibles. I'm going to talk about what deductibles are and how you can efficiently claim them. And then from there, in the 120 to 180 zone, yours goes all the way to 35%. And then beyond that is 45%. And so the unfortunate thing is, once you get up into these territories of 180,000 plus, even 150,000, you are taxed at a much higher rate than a company. Because if you look on the right, so I'm a registered company. Strength of Saad is a registered company. Most people who's with small businesses or middle-sized businesses are, because it's much more efficient to do so. Now, what's the difference here? The difference is, if you have an aggregated turnover of under 50 million, then your tax rate is 25%. 25%, which you can see in the right diagram. Make that better for you. So this is clearly lower than the 32.5 and the 37% in the sole trader column. However, 25% is done across the board from $0 of income. So your first dollar of income is taxed at 25%. Whereas as a sole trader, the first 18,000 is nil, and then it builds up. So there's nuanced differences here that need to be considered, particularly if you're a health professional, small business owner, which I work with all the time. And then you also need to consider GST on top of that. We will talk about that towards the end. But 25% is a flat rate across the board. Absolute number is much lower than 32.5 or 37 or 45% as a sole trader. So keep this in mind. Now, next, tax deductibles. Don't be a dummy. When I say don't be a dummy, don't be unintelligent. be perceptive, be aware, do your homework, do your research. I've done it for you. So you can basically don't have to. Now, this is all from the Australian ato.gov.au website, from the deductibles page, because I knew some of you would have a level of skepticism if I said something, and you would wonder, oh, because some of you were quite conservative. Some of you were quite, oh, I don't want the government to come to my house and arrest me and put me in jail because they think I'm Wesley Snipes. Look, you're not out here trying to tax evade millions of dollars. So let's just describe how the ATO says, the Australian tax office says deductions work. Okay, you can claim some of your expenses as deductions. The expenses you can claim are mostly related to earning your income, but there are a few, such as donations, that aren't related. Deductions reduce your taxable income. It works like this: your assessable income, so money you earn, minus your allowable deductions, equals your taxable income. All right. What can you claim? Work-related expenses. The expenses must directly, I highlight here, directly relate to your earning income. Okay. Well, directly, technically, is a subjective term, but the ATO also does provide a guide for each occupation that you can read, and I'm going to show you that later. And you must have a record, a receipt. Electronic receipt is fine. You do not need to get, and I've spoken to a couple of accountants about this, you do not need to get invoiced for everything. People seem to think you do. Electronic receipts from my communication to my accountant and one of my clients who's an accountant are acceptable. Other expenses that you can claim in the right-hand side here, which is interesting, I don't think a lot of people know. Gifts and donations. I give a gift to a client. Maybe it's a Christmas gift. Tax deductible. I donate to a charity. Tax deductible. Expenses related to earning income from investments. Expenses related to earning. So let's say, now this one depends on how you technically define investments. Let's do it in maybe the more classical sense. Perhaps you invest in real estate and there is an expense occurred as a result. Maybe you hire a real estate agent. Maybe you hire someone to help you be able to invest. Tax deductible. Personal super contributions. Income protection insurance. I got a video later coming out. If you want to know more, subscribe. I'm going to make a video coming out that will show you. I'm going to demonstrate that why super contributions for small business owners and people who want to make $500,000 to $1 million plus are, I believe, a complete waste of your money and time. Video for another day. Hold your judgment, please. And the cost of managing your tax affairs. So accountants are tax deductible. So, the main thing is the expense must directly relate to earning your income. Directly relate is subjective. We're going to get into more specifics in a moment. So, I give you an example here. Now, this is a very real example. Let's say you're an employee who earns an annual salary of $60,000 before deductibles. Let's consider some deductibles. Let's say you spend $1,000 on work-related expenses, maybe uniforms, tools, equipment, software. You have home office costs. I'm in my office, so my desk, my lights, my headphones, my camera. Okay, anything the plants around me. These are expenses directly related to my office space. Let's say it costs me $2,000, $5,000, $10,000 a year to maintain it. Maybe you have a $2,000 standing desk, an ultra-wide monitor. All of these can be claimed. Donations, talked about that. So let's give an arbitrary example. You have $60,000. You minus the expenses directly related to your job, and you're left with a taxable income of $56,500. Now, these expenses are quite low. Most people's expenses are not this low, particularly because what I'm going to show you after and how you can leverage your other expenses, because there's generally a lot more expenses that people can claim. So this is what your taxable income would be. This is an example. So first ask yourself, am I even claiming these bare necessities right here? Am I claiming some of this stuff? The office, the phone, work-related expenses. Who says that uniform? Who says this isn't a uniform? It is a uniform. It's a nice shirt. I also do wear it on occasion out, but it is primarily my uniform now for my content, right? Be more professional. Talk about professional subjects. I've got to embody being a professional. This is what partly being a professional is a nice little shirt, not too done up, Not too, yes, sir, no, sir, 3 bags full, sir, but, nice, got chains, a little bit of flair. It's me, right? Anyway, this is an example of tax deductible. Who says these pants aren't tax deductible? These socks I'm wearing are tax deductible. It doesn't mean I can't wear the socks and the shirt elsewhere, but you need to be intelligent about the way you manage your tax deductibles. Many of your clothing's choices, particularly females who spend a lot of money on makeup and clothing, is part of the uniform. Makeup is part of the uniform, mandatory to wear for many retail organizations. Did you know this? Hospitality, some as well. Jewelry. So you can technically claim that. Now, I need to be clear for those who need to hear this. I'm not an accountant. I'm a business consultant. I help people grow their businesses from 0 to 100,000 plus and scale them, systemize them, as well as a health professional. So, this is not financial advice. I'm not an accountant. You do not have to listen to anything I'm saying. I'm simply speaking, one, from first principle thinking, from the technical information from the ATO, my own experiences with myself and my accountants and my students. Now, let's apply the tax rates. I lost my metal bottle, so hopefully it doesn't trigger too many people. Now you'll apply the tax rates to the ATO. All right. So now we're going to break it down. Okay, tax rates, calculating the tax owed on that money from the previous example. $56,500 falls into the tax bracket of $45,000 to $120,000. So the first taxable income, this is how your tax is going to be calculated, just so you know. You'll have the tax on the first, so remember 0 to 18 is null, and then you have 18 to 45, which is going to be taxed at 19%. That's $8,500. Then, number 2, the next bracket is the remaining $11,000 from the bracket of $45,000 onwards to $56,000. So then that's taxed, and then you have $3,700. So the total tax owed is those two numbers together. It's about $12,000. So on your income of $56,000, you owe $12,000 plus dollars in tax. Now, most people are dummies and they have not put this away. They have not put this away. You need to automate monies based on these percentages that goes into an account. This is your first priority. That tax money, this is not yours. This is your price of doing business. This is your price for operating in a capitalist society. If you don't like it, move to another country. There are some countries and some cities and some states that are very tax friendly. And there are some others that aren't. Some European countries are very non-tax friendly. But as a result, you get a different quality of life and access to things like healthcare. So keep in mind that you need to put aside this money. I'm going to have another video come out, okay? If you want to know, go on my email list or subscribe or go on my Instagram. And I'm going to have another video come out that's going to explain my bank management system, my money management system of what I use for myself and all my students, so you never have to think about again whether you have enough money for anything, including tax. Next, common deductibles to save money. Okay, here are some deductibles you should consider claiming and ask your accountant on. You can welcome to fact check this, send this to your accountant, and they can fact check me with their level of expertise and level of risk tolerance. I have a higher level of risk tolerance. As some context to some of what my possible bias may be. You may have a different level of risk tolerance. As a result, you just may pay more money. And even then, risk tolerance does not mean you're exiting the boundaries of morality, ethics, or legalities. It just means you're asking more questions and going deeper into what's possible. Just to be clear. Common deductibles to save money. Rent. If you use part of your home exclusively for work purposes, which I do, I can claim this as rent. I did that when I was an Australian resident. And now I'm an American resident. So consider that. Consider claiming your rent because you absolutely can. If you use it for work. A lot of you work from home as well. Fuel. If you use a car for work-related travel, such as visiting clients or traveling to different work locations. You can usually claim a portion of that. Same with car service fees, travel costs, airfares. I'm going to fly back to Australia soon. I fly back periodically to run my retreats. As a result, those airfares are business-related expenses. Now, consider this. Consider this. I just have a question for everybody. Let's say I have a client. Actually, he's gone to Peru. Okay? He's gone to Peru. The primary intention for his Peru trip was personal, to travel. However, let's say this client decided, actually, I'm going to have some business meetings, some business conversations with some people that I have over there. I'm going to talk about my business. I'm going to have some meetings. I'm going to run my business from overseas there as well. Well, technically speaking, now this travel is partially directly related to the running of the business. So could you technically claim those travel expenses that were personal in nature as well as business in nature? Well, I'll leave that up to you to speak with your accountant about, but let's just say it has been done many a time. One of my mentors, his lunches and dinners get claimed all the time. Some people claim, and there may be a business conversation being had, but there are also maybe personal conversations being had. A question I have is, how would the ATO truly know whether the dinner or lunch you had was purely about business, or there was some personal sprinkled in there as well? Some people who really want to subvert tax situations, and I'm not saying you should do this, is they may have personal lunches with friends and family, and they may even claim those. Maybe they talked about some business. So there may be some flexibility you want to consider, understanding that, from my understanding of being audited, explained by one of my accountants, is an auditing process that maybe many of you are fearful of, is not a knock on the door, you're arrested now because you miscalculated $1,000. The ATO, and this is directly a response from them, I'm paraphrasing here, the ATO don't want to find, they don't assume guilt by accidents or mistakes. They understand accidents and mistakes happen. They try and clear it up. You may owe some extra money, or you may just need to simply clarify a lot of the receipts and electronic statements that you've been showing. Large increases in expenses or large increases in income relative to the past year or relative to your industry are flags for the ATO. So if you are a dummy and start lying and putting in very big tax deductibles that are abnormally high for your industry, and you make hundreds of thousands or millions of dollars a year, the ATO might want to ask some questions. But it's not asking questions to put you in jail, because then you don't make them as much money. And this idea that people are so fearful when they simply, from my understanding, and people are welcome to share their stories, or rather share actual, not just stories, because anecdotes are not very reliable sources of evidence, because one story does not mean it's the rule. People are welcome to share live accountant information or ATO information. Okay, I'm very open on this subject to being not proven wrong, but just being clarified. I wouldn't be as fearful of this stuff, because the mistakes that you may make in claiming your deductions, people actually make mistakes, and it's okay. And you can rectify it by simply paying back the ATO the money that maybe you missed. Genuinely, people make mistakes. So keep that in mind. And keep in mind that genuinely, you can claim possibly a lot more than you think, and people have been known to do so all the time, and they weave in business-related expenses into their day-to-day life. My trips that I've taken, almost all of them become about business because they are about business. I'm having coaching calls, I'm meeting with people on the ground, I'm having conversations about my business with people on the ground. These are legitimate business expenses. So think about how you can weave in more of your business into your travels, and you'll make it more favorable from a tax deduction perspective. And yes, this does apply if you're a sole trader too, because maybe you go travel somewhere to do a retreat or some education that helps you directly with your work, or partly to do with your work. So this is okay. So there you go. Work, fruits, and appearance meals are an essential part of your job. So there's more nuances. You can pause the video and read there. Now, what about this? People ask me. Self-education and coaching. So my coaching is very multifaceted, very holistic, classified as self-education. And so it allows many of my clients, I would justify from my perspective, all of my clients actually to claim me and my coaching and mentoring services as a business expense. It's a tax deductible. This is an example from a support care worker, but the phrasing of self-education study expenses is very similar amongst pretty much every occupation. So let's say you hire me as a coach or your business consultant, right? And my coaching covers not just health and training, but psychology and habits and wellness. And you're talking to me about your work-related problems. I have most of my clients actually talk to me directly about their work-related challenges and problem-solving communication issues and logistical issues and business issues and money issues and operations directly related to the client's work, right? Well, how can we claim such a thing? Well, under the ATO's guidance, you can claim it if it maintains or improves the specific skills and knowledge you need for current duties, results in or is likely to result in an increase in income from your current employment. Now, I put money mentorship and money guidance and money, I talk about money and people's money literacy all the time with my clients now. I have these series of videos that are also part of that self-education piece. So part of my role, if you hire me as a coach, is to help you make more money. Even if you're just a client looking to get to the bottom of some gut issues or get jacked or get healthier, become a top-tier athlete, I'm still going to talk to you about money because you can't really do much without it. So that directly and is likely to result in an increase in income. Therefore, my coaching, my education, what you pay someone like me for is tax deductible. But the person who maybe just does your training and programming, harder to justify. So it's a good thing when you work with someone like me, then you can claim it. So all clients watching this, all future clients watching this, remember, claim my services as a tax deductible because you can. And then you can go to the website and you can, right here, and you can see, and you can click on, fitness industry, sporting industry, and you can see all the things you can claim. They make a little bit of a PDF here, and they show you what you can't claim and what you can claim, and just over some different categories. So you can go here, and this is occupation industry specific guidelines, and you can just look this up on the ATO, and you can get very clear-cut understanding of what you can claim if you want to be super conservative, and then speak to your accountant about what else you can claim as well that are also influencing and directly related to your work as well. Now let's finish with this. Sole trader, I made an error. I don't like that. Sole trader versus a company structure. When should you go to it? Well, first let's describe the difference. A sole trader business structure, you have much fewer setup costs. It's just simply an ABN number. Obviously, you don't necessarily have this if you're employed by somebody, but perhaps you're employed by somebody and you have your own business. This is a classic setup that a lot of people do. It's very cheap, very easy and simple. You can do it within days. A company is logistically more complex. You need an accountant to help set this up. I tried to initially do this myself, and it was a complete mistake of my time. Do not try and set up a company by yourself unless you're an accountant. It's an utter waste of your time. Just pay an accountant the thousands of dollars that they need to save you dozens of hours. It is absolutely worth it. And all of these fees that you're going to pay are absolutely worth it in the long run. And I will show you why. This is an investment. You're thinking, oh, I got to pay $500 in registering my company. Oh, I don't have that. I can't afford that. Or I'm not going to do that. I don't need that. No, wrong. If you actually plan to make more than $100,000 in your life as a business, as a sole trader, as a company owner, business owner, then you absolutely should be doing this. But when should you switch? So I've typically told my students around the 100,000 mark, but I'm going to be more precise here about when it actually becomes favorable to switch. I'm going to give you first the example of about 125,000. So if you're making 125,000 as a small business owner, as a sole trader, then here's what it would look like from a tax perspective. I'm just going to skip ahead. That's a repeat. All right. So on $120,000 of income, you will pay. Well, I'm going to show it here. I'm going to do sole trader versus company. I'm just showing you all the results. All right. Sole trader, you pay $31,000. Company tax, you pay $31,250. That's pretty much a break even at this point. So at this point, this is the threshold to which if you're going to stay at 125, it doesn't matter too much. Okay, you probably stay as a sole trader. If you actually want and will make more money than this, then shift over to a company. And I'm going to show you the threshold. So above this, it becomes absolutely favorable to switch over to a company. 125 and above. This is probably about when I did it. This is the title of my presentation. This is how you save $10,000 to $100,000 in money. It is in tax deductibles. You will save thousands and thousands of dollars on tax deductibles because your taxable income becomes less. In regards to $200,000 of income, a sole trader would pay about $60,000. A company would pay about $50,000. Because this is by the way, this is before deductibles. Before deductibles. This is just everything is even. It's $200,000 sole trader, $200,000 company. The company will pay a flat rate 25%. The sole trader will pay different bracketed percentages up to $200,000. So they're going to pay, 42% at some points. Considering that, you're going to pay $10,000 more dollars. And if you don't know this information, this is how I save people so much money. Because I'm telling my students this in our calls. Now I just don't want to. There's some obvious things that I don't want to keep behind, mentorship programs that I run. I do want to share it. I want to inspire you guys that there are many principled, foundational ways that you can save money, make more money, and I want to share those with you. Because if you can selfishly, if you can make more money and save more money, then you can afford people like me. You can afford to do, if you're a small business and want to grow your business, you can afford to do more things like that with people like me. So selfishly, I would love to save you and help you make so much money for free that you actually see me being valuable to invest in the future. And if not, it helps you anyway. And I want to be of service to the world. So I'd like to explain my intentions because I want to get rid of all the smoke and mirrors. I just want to be, all right, here's what it is. So you should absolutely change to a company between 125 to 200,000 plus. Where the $100,000 comes in is year on year. Because let's say you make $500,000. All right, now this increases even more. So make 300,000, whatever it is. Over year on year, 5 to 10 years, you will save tens and tens and tens and tens and tens of thousands of dollars, which will accumulate to $100,000 plus. So that's how you save the money, by switching over at the intelligent, correct time. And tax deductibles will compound that. Yes, you have 10% GST, which is government service tax, which you'll see on all your receipts. It's inclusive in Australia. It's on top in America. You think the bill's going to be $70. And it's like, oh, service fee, tax. There's a New York state tax. There's state tax. There's New York City tax. There's state tax. And then there's tips. And then bills like 3 times the amount. What the hell happened here? In Australia, we seem to have a more intelligent system where it's built in. People like to be very critical of Australia. People who live there like to be very critical of their own country. When you travel to different countries and you live in different countries, you realize a level of gratitude to how good the system that you're running in is actually in. Anyway, 10% GST. What do you do about this? Hey, man, what about this 10% GST? That takes it to 35%. 25 plus 10 equals 35. Suddenly not as favorable. Well, the government service tax should be built into your prices. So I've got clients of mine watching this. You need to consider that when people increase their prices, a level of empathy should be had, because literally the government, after $75,000 of income, will take 10% of what you earn. They say, that's mine now. Thank you. 10%. If you make $100,000, that's $10,000. Thank you. Actually, sorry, it's over 75,000. But nevertheless, they can absolutely take thousands of dollars just for playing the game. So keeping in mind, that's why a lot of businesses increase their prices once they're coming up, okay? Because they have this 10% extra that they have to pay for. They're not making more money from it. They're not making more money from increasing your prices necessarily. They're still breaking even at the same level. So as a business owner, as a consumer, please be mindful of that. Be mad at 10% GST, because now I have to put 10% GST and state taxes on my invoices. I don't want to, but then I'm charging, and the business owner is charging much less than they're actually have calculated would be profitable. Businesses can lose profit or significant margins if they don't calculate this in. So 10% GST should be calculated inclusive into your price, whether you up your price by 10% or in your invoicing. You up your price by 10% and you communicate, hey guys, I'm just paying GST. I'm making $0 more from you. I'm just making the same money. If you don't think it's fair, or if you have any problems with it, just let me know. This is just very basic how on the fly I like to communicate these things with people. And so this is another component of my money mastery course. I have 10 plus videos on strengthofsaad.com, which you can see in the masterclass section on my website. Also on my YouTube, Strength of Saad. And for all my students and clients watching this, please begin implementing this. You guys are the reason I'm making this, because you are the real life case examples that I am the most committed to helping make more money and save more money. So execute this. Once you get crossed the 120,000 mark, we need to register as a company. Message me if you want my accountant. Very good. And be intelligent. Save money to make money. Use tax deductibles. Build GST into your pricing. Cross over to the company once you reach 120,000. If you're an employee, remember, yes, absolutely, claim deductibles. Speak to your accountant about considering claiming more deductibles, like your self-education services as well. If your accountant is very conservative and plays it safe, maybe consider an accountant who is more open-minded, or just generally asks more questions and is a bit more efficient about the way they handle your tax. Because that investment, they might be a couple $100 more or $1,000 more, but that investment can save you thousands of dollars, and it's definitely worth considering. I'm Alexander, Strength of Saad. If you want to know more, you can go see on Instagram at Strength of Saad, or subscribe here, and then you will see more videos like this on business and holistic health. Have a beautiful day, make money, and get after it.